Ah, là, normalement, ça devrait à peu près fonctionner. Hello. Is the stream working? Yes, it seems to be, kind of. Yes, it's working. Poorly, but it's working. Hello everybody. Welcome to this live by Dubai Trading Academy. Sorry for the low quality. Normally everything should be fixed tomorrow. We are gonna do our best. So it might be a short live because with this quality there's not really a big point to continue for a long time. So today what we're gonna do, we are gonna quickly go over the news since last week. Quickly check how the market behaved. Do a bit of technical analysis on the Nasdaq. See what would have been our scenario for the day if our internet was working better, because with a bad internet like we have now, it's stupid to take position because you never know, you might get cut, you might have some problem. So really that's not what you want when you're trading. You want to have the best and most stable connection possible. So yeah, that's basically what we're gonna do today. So today basically we have since last week we have the big Israel buy. We're not gonna go into the detail because it's a very complex situation and geopolitical nightmare. But basically it's add more instability to a region that is already unstable, and it's quite a we saw the market reacted. Maybe it overpriced the effect of the war, especially because of the reaction of the Saudis. The level of supply even increase it to answer the demand. So we're going to see that more in detail later when we. And it provides insight on the source process of the Federal Reserve Board, and it helps us anticipate the next monetary policy. Basically, what they say, the key, like I can show it to you how it looks like. I've got it on my computer. I'm gonna put it here. So basically it looks like that. It's like 10 page, two column, and it basically explain how they anticipate how they see the economic situation and how they anticipate the future market condition, and how they want to the policy at that condition. So basically that's that. Basically what they say is they're gonna proceed carefully on the next interest rate decision. So it's quite important to. So basically what it means is they might continue to pause and just keep the interest rate high for a longer time. We don't really have the exact. We're not inside their head, so we don't know what exactly they're going to do, but that's basically the market interpretation of this document. Otherwise, we had some, yesterday we had some inflation number with PPI and core PPI that were a bit higher than anticipated. We can see that the market corrected before going back up. Like I can show it to you somewhere there. Yeah, here is the PPI publication. So we see the market dropped, then it went up, tried to break that resistance level, didn't succeed, then went to reach this support level, and at this support level it went shooting upward toward this resistance level and this support level. So we can see that even with strong inflation number, market seems to think that the economic number we had like a jobless claim, like we had PPI yesterday, we had the API weekly crude oil stock with a big increase in oil stock in US. For today, we had lots of economical number from mostly a lot for UK, but it's not really relevant for us. We had the OPEC monthly report that I didn't read, I should, but it's more about oil. Then we've had the GDP tracker for the UK, so still not that important. But we had the core CPI and the CPI, and we see that the inflation is maintaining its level, even increasing a little bit for CPI, probably because of the price of oil. So it's even though it's not necessarily completely good, we saw like today, if we look at the market, CPI is here, the market dropped, but the Fed watch tools all seem to say that basically they're gonna maintain their interest rate for now. We see jobless claim is maintaining its level, same as it doesn't really affect the market. So that's basically it for the economical calendar. Tax, CPI. If we look at all of the market, we can see that equity, it's mostly in the green. Europe is, Asia is really a lot in the green. 172 for Japan, 184 for Hang Seng, also Hong Kong. Euro stock is 0.42% up. CAC 0.3, FTSE 0.72. So it's mostly a good day for equity at the moment. Then if we look at bond yield, we can see that the bond yield continue to increase. And there's like some worries about the 10-year yield, and they say that if 10-year yields reach above 5%, it might be catastrophic for the economy. We're getting closer, and it still should. We see equity. Ah no, wait, sorry, it got updated. Euro stocks and CAC are in the red. Equity are actually all in the red. Sorry, it's down. The VIX is up. It's around 16%, so a bit lower than last week, but still pretty high. And then if we look at the steer, we can see that the Euribor, the Bund are more or less stable. Same for Sonia and Sofr, so not that important, not a lot to say about it. And if we look at the currency, we can see, the euro dollar has dropped a lot since this morning. Probably because of the inflation data. Same if we look at the WTI and the Brent, it's going back up after 6 days of, no, it's not going back up. It's going back up after several days of going down. Like it's here. If we look, you see it's been going down and now it's coming back up. It might continue to go down, so we need to be careful. So we need to be, it's like a weird economic context, especially it's hard to analyze it with us, like in our situation with poor internet. We see the gold is getting closer to 1,900, so it's a pretty strong resistance level. So if we break this level, it might go up. We might manage to go up again. So that's quite good for a gold investor or gold investor out there. There's quite a few because gold is quite popular as anti-inflation protection. So basically that's most of it for today, because we are like not that it's not that much of a big day, even though we've got some quite important publication. Also tonight, I forgot to say, sorry, we have the oil inventories as well as the Fed to be lower than last week's one. So that would mean that because at the moment they're doing hawkish policy, so it's more quantitative tightening. If we look at the beautiful Nasdaq, let me get you the 4-hour one. It's there, it's coming back here, and hopla. So, after a year of upward trend, see from January we've been going only up, we can see there's a slowdown in the price of Nasdaq. And if you look at some technical analysis, we are like getting closer to some pretty important level, because if you look here on the upward channel that we've been following for the whole year, we can see that we are getting closer to the bottom of the channel. Well, I haven't done, it's not my most beautiful channel, but 50 for, yeah, 550. We can see also that we're getting lower highs and lower lows, even though those two lows are pretty close, but this one is actually a bit lower if we look carefully. So we can say that it's basically breaking in the previous trend. It start a downward trend. So why does it matter? It's because we try to not trade against the trend, but also we are trading on a short time frame, and so 4-hour trend is not necessarily always relevant for us, because if we look at the half an hour here, we can see that basically, even though we were in a downward trend in 4 hours, in half an hour we are in an upward trend. Therefore,